Hello traders, Nick here, looking at oil, but more so of a lesson on levels. This is not oil right here. This is the yield curve inversion, the 10s over 2s, which freaked everybody out yesterday. Today it's above the inversion line. It inverted briefly yesterday, but it's not in the news anymore. So they cover it for one day. Anyway, before I forget, at the end there will be a pop-up saying subscribe to this YouTube channel. It's free. Do it. Oil. There we go. This is a daily chart for 1 year. So usually, not usually, every candle is 1 day. And before I decide on oil going up or down, I look at the charts. First of all, I usually win on trading the oil using the USO on extremes. And it's all never wrong, the trade, because when everybody believes one thing, then definitely it's not going to happen, and that happens on the bottom and on the top. So when oil falls and everybody starts calling for $30 oil or 35 or 40, I say let's go along. And when everybody starts calling for 75, 80, let's short it. And indeed, I shorted it here and I went long it here, and they both paid. So now what? I'm not an expert on oil. This is not a recommendation to trade it one way or another. I'm merely sharing the levels that make sense to me and that are important here. So from a perspective of a daily chart, we have some clues, and let's see where the clues. Sorry about that. So let's see here. Let's mark it up. Again, this is a 1 year. Obviously, it has had a big range. So that's the first thing I noticed. The big range getting tighter and tighter and tighter, and now it's this tight. Okay. So these are the first two lines that pop into mind. 60, which is an obvious place. Whew, bad color. And where it's at. Where it's at right now is important for several reasons. A, it's the point of control for the whole year. This is where bulls and bears fought the hardest over it. And so on the way down, it should provide support until it's not. But it does provide support. Case in point, support, support. So if this falls and bounces off of it, great. Then I ask how high, right? Because we have this line to look at. Lower high, bumping along a floorboard. If the board holds, then this will happen. From what point, right? We don't know yet. But what I know is I consider this support until it fails. And what happens if it fails? So then we look at what are the repercussions. First of all, look at it here. I drew the repercussions. It didn't come. I also drew the upside potential, like here. It came. So I share usually both options, and I wait for a breach and chase it. Instead of buying and hoping it happens, wait for the trigger and chase it. Same as here. There was this, and there was this trend. Which one will happen? Also this. So there were 2 triggers and 3 triggers. So I could have chased it here, here, and here. So here we go. What are the repercussions? So you've heard head and shoulders. This is kind of a shoulder. This is kind of a head. This is kind of a bigger shoulder than this shoulder. The bottom line is when this neckline breaks, they tell you, they as in the technicians, which I'm not one, this is the downside potential from the top of here to the neckline. And the neckline, they'll probably draw it right at the tips, either at the bottom of the candles themselves, the closing, or the body, or the hairline trigger there. And then they go, this is the potential. So to me, that's okay. I believe that the break will if it will happen, there'll be a downside whoosh. But I bet you anything, this will be the zone where it targets first, at least. So I'm not calling for it, but I'm saying if this is lost, this would come. This would be the ideal target or lower, but this should provide some support. This was an emphatic rejection, and it should stand until it doesn't, right? Conversely, on the upside, I watch what happens on bounces. So if it bounces and falls again, and it bounces and falls again, then it comes to a point to where the range is so tight that something has to do this or that. So that's how I would trade it. A whole bunch of stuff on the picture, right? So basically, I should change that color. It's hideous. Red. There we go. This we can see here. All right, so I would watch for levels, and to get the levels, the top of this candle would be one level, the top of this would be one level toward that. So actually, let me go down to a lower time frame. So this was daily. I'm going to go to, whoops, did I do 12? No, 2 hour. Okay, perfect. So 2 hour time frame. So now same chart, only on a 2 hour time frame. So now you can see that I have levels to choose from. So 53.70 something, 53.50 would be a lower time frame trigger to short or to expect a downfall to here, which was the next consolidation zone, or a breach of this cluster right here. So pick a line that you like. I usually want to be as safe as possible, so I go to the highest one, 55.4-ish, or 55.5 for a nice round number. If I look left further, look at where that is. Another cluster. And this is a giant candle. I don't know what happened here. I don't know what happened here, but look, they love to be violent around that level. So there's a moving target of 55-ish. It's a moving target that is important too. It's like a swing level. So I would draw the line and wait for the breakout and trade accordingly. And this will be the trigger for a much bigger potential up there. So if you believe in head and shoulders, you believe in the opposite of such. And if this happens, or wherever you draw the lines, this way or that way, this is a test and a test, and this cup and handle. You heard that, right? It's basically a bearish effort that is waning, and once they break through the neckline, either you draw it here or here, then the bulls might carry higher. And again, usually the size is about this much up. But first I look left, so this is going to be a first zone of resistance. So these are levels that are pertinent to oil. These are not recommendations to trade. I'm just helping out a few people that have asked about the, by the way, this is the light crude futures. I could have done the same thing exactly with the USO.